What's going on with SOFi stock? It's up today over 3%, so a nice pop, but it's still down almost 75% from all-time highs in 2021. And you can see year to date, it's up about 28%. On a one-year chart, it's down 43%, and on a max chart, it's down 44.72% all-time. SOFi reported its Q4 earnings in late January, and the stock rallied to almost $8 a share. But recent market volatility has brought the stock back in the fives. So what's going on with SOFi stock? And is it a buy at these levels? So Q4 GAAP EPS, a loss of 5 cents, but it did beat by 4 cents a share. Adjusted revenue, $443.42 million. That did beat by $17.58 million. And it was up 58.4% year over year. Very solid. And Q4 net loss, $40 million. That did narrow by 64%. Year ago net loss was $111.01 million. So new member additions was 480,000 for 2022, bringing that total to 5.2 million members. That's up 51% year over year and in a tough market. New product additions of over 695,000 products with total products of nearly 7.9 million products at the end of 2022. Their lending products were also up 24% year over year, and that demand was primarily from personal loans. In fact, personal loan originations for Q4, $2.5 billion, and that's up 50% year over year. But student loan originations were down 72%. That number went to almost $1.5 billion to only around 406 million. And I'll explain why in a minute. And the numbers were strong across the board. Financial services segment up 195%. Guidance of $430 to $440 million in revenue. That's up 34 to 37% on a yearly basis. And for the total year for FY 2023, expected adjusted net revenue between $1.925 billion and $2 billion. That's up 25 to 30%. And both of those are above consensus estimates. So these are strong numbers, but the market doesn't seem to care. So what's going on here? Let's keep digging. One concern I want to address right away. I see this all the time. Comments on Twitter, on YouTube, talking about SOFi is trash. They write bad loans. A lot of their customers have bad credit and so on. So is that true? Let's look at the facts. So first, what is a good FICO score? The base FICO scores range from 300 to 850, and FICO defines the good range as 670 to 739. So what do you need to qualify for a SOFi personal loan? You generally need the following to qualify for a SOFi personal loan. Good credit, FICO score of 680 or higher. The average SOFi borrower has a credit score of 730. Here's another site. It says that borrowers need a credit score of 680 or higher. These are good credit scores. Here's a post from Reddit. They want a $100,000 personal loan. What kind of FICO score do we need? Here's a reply. I can't speak to the FICO score, but I wasn't able to get over $50,000 with any of the services I tried, even with a score of 800-ish. Now a max score is 850. So when I see comments saying that SOFi stock is trash because they write bad loans, the people that are going to default, it's not true. So now that we have debunked that myth, what other risks are there to consider as an investor? So one topic we need to get out of the way is student loans. Now this can be a pro or a con depending on how you spin it, but no matter how you spin it, SOFi has been losing a lot of money because of student loans. In fact, 97% of SOFi's loan portfolio is student loans. 97%. So of course, student loan forgiveness and the moratorium, they're not good things for SOFi. And since the adoption of the moratorium, SOFi has lost hundreds of millions of dollars. Now, the moratorium was scheduled to end at the beginning of this year, but then lawmakers challenged that. And so we don't have a lot of clarity here. I'm going to go through the facts that we do know. So President Biden's plan is to forgive as much as $20,000 per person for student loans.
News out of Washington, President Biden set to speak this afternoon, announcing his long-awaited plan to forgive student loans for millions of Americans seeking to deliver on one of his biggest campaign promises. Here's what we know so far. That plan would forgive up to $20,000 in loan debt for borrowers who went to college on federal Pell Grants. Those go to undergraduates with the most significant financial need. It would also cancel up to $10,000 for borrowers earning less than $125,000 a year.
A few moments later.
Tonight, the Biden administration's plan to wipe away nearly $500 billion in student loan debt, facing a skeptical conservative majority on the Supreme Court.
And along comes the government and tells that person, you don't have to pay your loan.
The financial futures of more than 40 million now in limbo. People like Maggie Bell, the first in her family to graduate from college, carrying $30,000 in federal loans.
Debt is difficult. It's depressing. It's stressful.
She wants the justices to uphold President Biden's plan to erase $10,000 in federal student loan debt.
And we'll probably hear something on this very soon from the Supreme Court, but we do not have an answer yet. So when you think of just the lending business for SOFi, student loan refinancing was their #1 product. But of course, since the moratorium, this has dropped off a cliff. And to make things worse, higher interest rates makes it less attractive to refinance. In fact, the rates now are probably higher than a lot of people have. So while all this is in place, there's really not a whole lot of reasons for people to refinance, especially when they're not even making payments right now. And why would you refinance when $10,000 or $20,000 could just be wiped away instantly? So we have several things in play that are impacting SOFi's business. One, the moratorium has lingered longer than expected. Number two, the student loan forgiveness debate has dragged on as well. And the market hates uncertainty. To top it off, many people are expecting a recession. Of course, people are going to spend and borrow a lot less money. Uncertain times lead to lower stock prices, especially with riskier assets, spec assets that aren't profitable. So is this a time to accumulate shares, or is more pain ahead for SOFi stock? Let's keep digging. So what facts do we have to help us understand this situation as investors? We do know from the recent lawsuit from SOFi that the latest extension of the moratorium has cost the company $6 million in profits and would lead to $30 million in lost profits if it continues until August, which of course is when it's planned to expire. Now listen to this. Since the moratorium has been put in place, SOFi claims that it has cost the company $150 million to $200 million in potential profits. Ouch. Okay, so that's certainly part of the problem, but what else? Well, for one, this lawsuit's not really helping out their PR campaign very much. SOFi is already under scrutiny for cryptocurrency, and so suing the Biden administration really isn't doing them any favors. Plus, this was a SPAC, and all SPACs have been thrown in the trash can. It definitely does impact sentiment. And of course, SOFi is not profitable, which is not popular in this type of an environment. SOFi posted a net loss of $320.4 million in 2022, and that's the 5th straight year that they've been in the red. With that said, SOFi is telling us that they plan to have profitability as soon as the end of this year. And when you look at risk, of course, valuation has to be considered, and we'll talk about that here in a minute. So what are some reasons to be bullish about SOFi long term? We already talked about customer growth, which was up 51% year over year in 2022. The company posted solid growth in very turbulent times. And here's a quote from the CEO. "We navigated unparalleled market volatility, macro headwinds, high inflation, and increasing interest rates, and 2 unexpected extensions of the moratorium. And they weathered the storm by reacting nimbly and leveraging the diversification of the business to hit record revenue in each quarter of the year. The fourth quarter was an incredible end to an exceptional year." But let's go back to that $5.2 million member count. How much room is there really for that to grow? So what's the total addressable market? What's the TAM when you think just of customer count? So we know that SOFi is targeting younger generations. So you think of millennials, Gen Z, maybe even some Gen X thrown in there. So how many millennials are there in the United States? 72.19 million. What about Gen Z? 68.6 million. And what about Gen X? 65.2 million. So when you add all that up, that's almost 206 million people in those demographics just in the United States. Remember, SOFi only has 5.2 million members right now, and that number was up 51% year over year last year. So if you take 206 million minus 5.2 million, they have 200 million people they could still get as customers. And of course, SOFi is not going to have all 200 million of those people, but even a small percentage could boost their growth exponentially. And on top of that, they keep adding more products, and they can cross-sell within the existing members as well. And then you also have to consider younger generations that aren't in the workforce. They're going to continue to age and eventually get in the workforce as well. And their strategy really is to get a customer and have that customer for life. So if you get a Gen Zer, the idea is that they'll bank with SOFi for 20 20, 30, 40, 50 years. Okay, so now that SoFi is technically a bank, they have a brick and mortar bank. They're a digital bank, but they do have a brick and mortar bank. We need to look at one very important metric for banks, and that's deposits. And of course, if you've been following the news, the whole Silicon Valley Bank thing has exploded, and that deals with deposits, interest rates, and so on. And SoFi recently launched a solution to FDIC deposit insurance. And of course, that's a $2 million solution. And what does it do? Essentially, it's trying to get more deposits during a banking crisis. It's trying to instill confidence in those consumers. The digital bank affirmed Q1 2023 deposits should already match the $2 billion levels of the prior 2 quarters. Additionally, total deposits at SoFi Bank rose 46% sequentially to $7.3 billion in 2022. And even better, these funds are likely to be sticky. So 88% of the company's deposits are checking, savings, or cash management accounts. And that's coming from members who use direct deposit. As a result of this growth in high quality deposits, we are benefiting from a lower cost of funding for our loans. Our deposit funding also increases our flexibility to capture additional net interest margin and optimize returns, a critical advantage in light of notable macroeconomic uncertainty. So this new product basically ups that FDI insurance to $2 million per account. So up to $2 million deposited is now protected. And SoFi is not necessarily a loan, but it is something to point out. And the quality of their deposits is much higher than most of these regional and smaller banks. So SoFi really seems to be leading the digital banking space despite many naysayers. Remember that the vast majority of their loans are student loans, and then they have some personal loans. These have shorter durations than mortgages. Think of a 30-year mortgage. And these assets are much less affected when you think of those rapid rate increases that we saw, like we saw with Silicon Valley Bank and its collapse. So SoFi is much more insulated from harm. On top of that, several insiders have been buying the stock, including CEO Anthony Noto, who has purchased an insane amount of shares. And the prices really range from $4.29 a share all the way to $14.46 a share. So he has extreme confidence in his business. Okay, next, let's look at valuation and a chart, and I'll tell you if I think the stock is a buy or not at these levels. So this is Fidelity's website. And when you think of banks, a lot of times you look at metrics like price to book. So SoFi's price to book right now, as of March 28, 2023, is a 1. And price to sales ratio right now, it's just under a 3 at 2.93. Now, it doesn't have a PE right now because it doesn't have earnings, but look at this. Next year's estimate, it does have a PE. That's very expensive though, 5,590. Let's look at growth. EPS growth projected this quarter versus same quarter prior year. Positive 66.67%. You can see positive 82%, positive 48%. Pretty strong numbers on growth. SoFi's problem is not growth. It really comes down to the fact that they're not profitable and they're still burning cash to grow. So next, I'm going to look at a chart and I'm going to show you where I think the stock could go. I'm going to tell you if I think it's a buy or not. Before I do that, I need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. I want to remind you guys that Motley Fool does not tell me what to make. They don't tell me what stocks to cover, what to say. I'm an independent analyst, and if you want to support my work, you can also check out patreon.com/firedupwealth and join our private community. So you'll see on SoFi's chart here, this S3, this is a Fibonacci support line, the S3. The algos pretty much took it right to that number, around $5.10, and it bounced off that. Right now, post-market, it's trading at $5.76. It closed at $5.75 today. Now, it's always hard to know where a stock's going to go by looking at one chart. And the reason for that, you think of macroeconomics, you think of the overall market. If the whole market decides to crash 10%, nothing's going to matter. They're all going to go down. All the stocks are pretty much going to go down. But assuming that the market stays in a bullish trend, which may or may not happen, but assuming that happens, this is probably going to bounce up here back into the 7s. You can see this P is at 704, and I would expect some pressure along the way. It's not going to go up in a straight line, and this certainly could go lower. This certainly could go back in the 4s. I think that this stock is probably an opportunity if you're a long-term investor and if you have the risk appetite for it. In fact, earlier I think I said it got close to 8. It was actually at 824 just here in February of 2023. So closing thoughts on this, guys. Here's the thing. SoFi is not profitable. That's one, right? You also have to consider the fact that all banks were sold off. So So anything in the banking sector is going to get sold off. And I think SOFi got dragged along with those other companies. Is the stock dirt cheap necessarily at these levels? Maybe not dirt cheap, but if you have a long-term horizon, you're thinking 5 years out, this certainly could be a bagger stock. I consider it a spec stock. So that means I'm going to buy a small amount. I'm going to dollar cost average, and I'm thinking very long-term. I'm bullish on this company, and I think it's going to continue to perform well and to grow. But there are never any guarantees, so you have to do what's best for you and for your money. But this stock, anytime it's at one price to book or less, in my opinion, it's a time to accumulate and think long-term. If this video is helpful, make sure you drop me a like, drop me a comment. I appreciate your time and attention. Have a great rest of your day. Take care.